Okay, good day once again, trader. Welcome to today's episode of my weekly Forex Forcast. I'm Ononaku, Tochiko speaking for Lazarus Capital, the general. Okay, so today I won't be wasting much time because we have 5 PS to cover today. We're going to be covering 5 PS today instead of 3. So I will just go right into the chart and then, tell us what I'm looking at in the coming days. So as we all know, my trading strategy, like I told us, is very simple. Once I've identified the direction of the market, if the market is trending and I've identified the direction, either it's trending to the downside or to the upside, the next thing I want to do is to identify my area of value. It means if the market is bullish, my area of value will be a support area, an area that price have tested in the past, that price have used as a resistance. I'll be coming back to turn to a support. When price comes to this area, I want my market participants to come in and I join them. And I also want to check this area if it's in line with my Fibonacci 5061.8 or sometimes a 38.2% if the price have expanded. When the market comes to this area and my market participants come in, for instance, if I'm bullish and price comes to that support and the bulls come back in, I'll join them. The same way, if the market is trending to the downside, if I discover that the market is trending to the downside, I've identified that the direction of the market is down, is bearish. I want price to pull back to a resistance area to my area of value, which is a resistance area, an area that price have used as a support before. I'll be coming back to turn as a resistance. I also want to align this level with my Fibonacci 5061.8. If price gets to that area and my market participants come in, I will join them. Also, if the market is not trending, if it is ranging, the market is in a ranging phase, I want to identify the demand area and the supply area. I want price to come to this demand area, I buy, or price come to the supply area, I'll sell. Inside the ranging market, I still observe my trend pullback inside the ranging market, because as you all know, like I told us before, the trading market is nothing more than me identifying an asset or a commodity that is in demand. I find out how much people are willing to pay for that commodity. Then I see how I can get that product at a cheap price. Then I find out if those people are still interested in the product. If they are, if I get my hands on the product, I buy it and I sell back to them. Also, that scenario is for a bullish scenario. For the bearish scenario, I consider myself as a store owner. If there's a product that I've been sitting in the store for some time that I've not sold, I'll continue to give a lesser price for the product. I'll continue to reduce the price of the product. Then one day, if buyers begin to come for that product, I'll stop reducing the price. From there, the price will start to come up. So I still bring this scenario into the trading market. So while even inside a ranging market, I still apply this trend pullback inside the ranging market, while holding the foundation of a ranging market for me, which is I buy at demand or a support, or I sell at a resistance area or a supply area. So having said that, me trading the market, my analysis of the market is divided into 3 phases. One is identifying the direction of the market. The second one is looking for a location where I know it is more safer to execute from. Then the third one is the execution. So identifying the direction, identifying the location, and executing. You understand? So having said that, let us go right into the chart. So we'll be starting with the BTC USD. So this is the BTC USD. For long, I've been bearish on the BTC USD, but this week that's just that is ending today, we saw the BTC USD rising to the upside. This move that happened here, despite the BTC USD, making this bullish move here, I'm still bearish on the BTC USD. Like I told us my analysis and my execution is being done on the 4-hour time frame. This is the 4-hour time frame. But if the market is confusing, I will go to the daily time frame or even the weekly time frame. But if the 4-hour time frame is clear for me as per direction, I just stick to the 4-hour time frame. So like I also told us that I also use the 200 EMA, for trend direction confirmation. Once price is trading below the 200 EMA, I'm bearish. If price is trading above the 200 EMA, I'm bullish. So I can see on my 4-hour time frame, the BTC/USD is still trading below the 200 EMA. So for the BTC/USD, I'm still bearish until I see a complete change of character on the 4-hour time frame and price start to trade above the 200 EMA. That is when I will change my bias from bearish to become bullish. But for now, for the BTC/USD, I'm still bullish. I'm still bearish on the BTC/USD. So so now we have identified the direction of the BTC/USD is still bearish. You can see, price have been, creating lower lows. We saw another low here. Even if this low, it looks like an equal low, but then price have not created a higher high. So as long as price have not created a higher high, this high here is still holding, then we are still, bearish on the BTC/USD. So I've seen that the direction of the BTC/USD is to the downside. What am I waiting for? I'm waiting for price to rise to a good location. From there, we'll be selling the BTC/USD, and I will be looking at this location right here. I'll be looking at this location right here. You can see that this area is a good resistance area. You can see that this area is a good looking resistance area. Guys, I like to go to the line chart a lot, so bear with me if you always see me before. I also like to go to the line charts because I want to see those areas that price have really tested, not the fake areas. So this is the line chart. This is a good resistance area. It was acting as a support here. There was a fake out here, support here, support from here. Price went up, broke below, came back, used it as a resistance, came back down. So we're expecting the price to come back to this location, use it as a resistance. From there, I expect the sellers to come back in. So I'm waiting for the BTC/USD to rise into this area. The coming days, I'm waiting for the BTC/USD to rise into this area. From there, when the sellers come in, from here I will join the sellers and I'll take the price back down. If I check my Fibonacci with this area, I'd like to look at this area here. To my Fibonacci, you can see that this line, resistance, support, resistance. From here, price launched from this place downward. This was where we saw the move coming down from. Price went down from there. So swing high to swing low. We're at 5061.8 at this point. 5061.10 is a good support, come back and act as a resistance. If I decide to take this Fibonacci from this high, this level is my 38.2. This is 38.2. From here to here is 38.2. A good Fibonacci area, 38.2. The market is expanding. So but if you take from this point, resistance, support, resistance, 5061.8 at this point. So I think this is a sweet spot for me. The most important thing is not the Fibonacci, guys, and that is the mistake some people are making. Fibonacci is an indicator. Fibonacci itself is an indicator. It's a tool, just like every other tool in the market. It demand your rectangle bar, your trend line, your EMA, your RSI, all of them, they are all tools, they are all indicators. So before you use these tools, you must understand the way price works. You don't just carry EMA, or you carry Fibonacci, or you carry trend line, or you carry RSI, or any of those tools or those indicators. Don't just carry them blindly. you use them, as like a secondary. They won't be the primary, you know, they won't be the primary, they won't be the foundation to the analysis you are doing. They are just indicators. You yourself, you are an indicator. You yourself, you are a tool. Do you understand? So you must understand how the price, how market moves. Then you now bring in those indicators. You can see I have my EMAs here, but I don't always talk about them because I have to understand the market for what it is. So long story short, in the coming days, what we'll be waiting for the BTC USD is to rise into this area, anywhere into this zone. From this point, 65, this will be sure, 65,905, 65,805, anywhere in between from year to year, starting from this 65,805. If the price rises into this resistance area and our sellers come in, we'll join them. Stop loss can be above here, 67,922. TP1 will come here at 58,397. Like guys, like I told us, I always go into my position. When I enter the market, I enter with two positions. I take my TP1 at the 100% retracement. Then my TP2 are allowed to run until I'm being validated in that position. So I'll go in with two positions. Then I'll take out TP1 here. Then I'll allow TP2 to run. So that is it for the BTC USD. Let's go over to the next pair, which is the Euro USD. So guys, for the Euro USD, I told us last week that I did a lot of storytelling in the Euro USD last week, which I will not be doing today because we don't have enough time. If I start that, maybe this video might take more than 1 hour. So because we have 3 other pairs that we are looking at today, I won't be going into those stories. So if you need those stories, you can go back and watch the last week video. I get the stories of the analogy of the sword fight and the rest that I used to analyze the Euro USD. So let's just go into the business of the Euro USD today. So I told us that for the Euro USD, I told us that this market, I see that it's still trending in a range, even though we saw this movement to the downside yesterday. I told us that for the Euro USD, I'm still bullish on the Euro USD, and I told us that I'm looking at the market and I said that this market came down from this supply area to this demand area. This demand area is an important one because when we go to the daily time frame, we can see that this area have acted as a demand area in the past. Price came back there and went up, and that told us that the Euro USD is staying in a range. And I told us that once the market is in a range, one of the rules for me is that once the market have left the demand area, it's going back to a supply area. And that told us that because I've seen that the market have left this demand area, all I'll be waiting for is a pullback to support so that I will buy. Because as long as if for instance, when this market left this supply area, I know it's coming back to this demand, I won't be looking for a buy. The only thing I'll be looking for is to sell. Once the market drop from a supply area, as long as it has not got into a demand area, if I'm to participate in this market, the only thing I'll be looking for is to sell. Now, when the market have bounced off, have taken off from a demand area, even if I did not participate from here, the only thing I'll be looking for is to buy until when the market comes back to the supply area. So with that rule and that knowledge, I said the only thing I'll be looking for in the Euro USD is to buy. But to buy the Euro USD, we have to be very careful because we can see this bearish move here that is strong. And I told us last week that the only time I'll be looking for my buy setup is when the Euro USD close back into this demand area. So I told us that I'll be waiting for the Euro USD. If the Euro USD close back above this demand area, I will know that yes, my buyers are back. But if the buyers fail to close back above that demand area and the sellers continue their move down, then I know that the sell is actually strong. I'll be waiting for a pullback to this support or demand that will turn to a resistance area Then if the sellers come back, I'll join. I told us that this is the only time that I will be selling the Euro USD. I won't be looking for sell from here. I won't be looking for sell from here unless I see a good close below this demand area and they pull back to this demand. I will turn to resistance area. From there, when the sellers come in here, this is where I will join them. Okay, so I told us that I'll be watching the market closely that last week, and we see before the market closed that price eventually, the buyers eventually succeeded in closing above back into this demand area. The buyers doing this, I will not say I'm happy, because whether they close above or whatever, if they like, the sellers continue their move below. It doesn't concern me. I'm neutral. Like I told us, I'm a mercenary commander. I'm not to one side that let it buy, I must sell. If the market is going down, we'll wait for pullback, we'll join them. If the market is going up, we'll wait for pullback, we'll join them. But coming into the week, I must have a bias. Like for the BTC USD, my bias for the coming days is to sell. For the Euro USD, my bias for the coming days is to buy. And the bulls have confirmed this bias for me by closing above this. If this is a daily candle, close above this demand area. But then the battle is not yet over. In the coming days, let me keep this here because I will still use it. What will I be waiting for the Euro USD? Let's go back to the 4-hour time frame. Bring this guy from here. I'll be needing you. Okay, guys. Now, in the coming days, what will I be waiting for in the Euro USD? Now, first, let me remove this here. Prices have broken above it. I've seen that the buyers are in the game. Now, I'll take this my horizontal line. I want to keep it here as a line of departure of the buyers. This is where the buyers launch their campaign. This is where the buyers launch their campaign. This is where they start the offense. They start the attack. This is where the buyers start the attack. So I'll keep this rectangle by here. Now, the sellers too are not done with this fight. The sellers are not done with this fight. Like guys, I told us that in the market, as a mercenary commander, what I'm trying to look at is, I'm looking for weakness. I'm looking for strength. I want to see the side that has strength. I want to see the side that shows weakness. Because I want to join the side that has a high probability of winning the battle. So I'm looking for weakness. So now, the buyers have come in with strength from this demand area. This is the line of departure. This is when the attack started. This is where they launched the attack. Now these sellers who came all this way down, they are not done with this buyer's move. I told us that I will be expecting the sellers to come back from this location. Where's my rectangle? From this location. Let me take the Fibonacci because I used that Fibonacci last week. From here to here. Here's the 5061.8 area. And the market came to the 50 area. Actually, that last week I used the 61.8. Nevertheless, I always use the 5061.8. I'm just looking like a worst case scenario. So now, these sellers now, they have a strong gold here. This is a good support that will come back to turn to resistance. Now I told us that first thing I want to see the buyers close above this level. I want to see the buyers close above this area, which is what they've actually done now. I want to see the buyers close above this area. I went to the path so that we can see this area. This is the demand area on the daily time frame. Let me zoom back again so that we'll see. This is that demand area. the daily time frame. And so people will be saying, why am I not using the trading view? Guys, please bear with me. This is one I'll be using for now, okay? Until further notice. Okay, let's go back to the 4 hour time frame. Okay, so I told us that first thing first is I want to see the buyers closing back above this area. I want to see the buyers closing back above this area, which is what they've done. They've closed above this area. Now, I'll be removing this now. Let me remove this. I'll be moving this. Now, in the coming days, the buyers have come up. I want to see the sellers come back, which they are coming. We can see the sellers coming in gradually. If the sellers come in, if they are serious, I want to see them close back below this area. I want to see the sellers close back below this area. If the sellers fail to close back below this area and they got here and they stop and they got here, okay, if the sellers come back and they get here and they fail to close below this demand area and they get anywhere here, they stop and the buyers come in, I will enter this market from this point. So in the coming days, what I'll be waiting for the Euro USD is a pullback. If I take this Fibonacci from here to here, I can see that I have a 5061.8 at this point. $50.61.8 at this point. And if I check, I think that level is actually a good support area. Just take all this. I'll take all this. Cool. So you can see. So I'll be waiting for the Euro USD to pull back into this area. If the sellers come in here and they become weak and the buyers come in, I will join the buyers here. Even if the sellers come back down here and they can, as long as they can't break below this area, anywhere from here to here, the sellers come and they stop and the buyers come, I'll join the buyers. Even if they get here and the sellers are weak from this demand area, I'll join the buyers from here. Or they didn't get to this demand area, they come to this support area, they are weak from here, I'll join the buyers from here. Do you understand, guys? So in the coming days for the Euro USD, they're waiting for a pullback into this area. When price pull back to this area and the buyers come in, I'll join them. This is where I'll be buying the Euro USD from. So even though you know the Euro USD has been trending to the downside, you can see price making higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low, higher high. As long as they didn't come to give us a lower low, as long as they didn't come to give us a lower low, they create an equal low. They fail to give a lower low, they create an equal low. The buyers come in, I will join them. Or they come here and stop here. If they stop here, it means the buyers have successfully created a higher high and higher low. I will join the buyers from here. So I'm not looking at this trend because I can see that on the daily time frame the market is ranging. The market is ranging. So when the market is ranging, I don't look at the trend that like the market is trending. I must trade in the direction of the trend. Once the market is ranging, I know there is supply, there is demand. So what I'll be waiting for is to buy at demand or support, or to sell at supply or resistance. If the market have launched from a demand area, the only thing I'll be looking for is to buy. So if it has launched from a demand area, I'm waiting for it to come back to that demand area or a support area. From there I will buy. If the market has fallen from a supply area, the only thing I'll be looking for is to sell. So I'll be waiting for it to come back to supply area. The only time I'm waiting for it to come back to that supply area or a resistance area, from there I will sell. Guys, I don't know if I'm making sense. So for the Euro USD, in a nutshell, I'll remove this. I'll wait for price to pull back to this support area. Wait for price to pull back to this support area or this demand area. The sellers get weak and the buyers come in, I'll join the buyers. So, but we'll be looking at this support area first. So for the Euro USD, if price comes to this support area at 1.13946 and the buyers come in, will join them. Stop loss can be below here at 1.13, 706. But if price comes to this demand area, we can still take our entry from here at 1.13235, and stop loss will just be below it at 1.13149. Tipo 1 can come back to this resistance area at 1.14724. Then allow Tipo 2 to run to higher time frame target until the trade gets invalidated. So let's move over to the next pair. The next pair will be gold. So on the gold, I'm seeing a similar situation with the Euro USD. Even though the price have been bearish, price have been moving to the downside for long. In the coming days, I will be bullish on the gold, meaning that what I'll be looking for is a buy setup. I can see that this is the demand area. From this point, market launched to the upside. Price is coming back to that demand area. So I will be looking at this demand area to buy the gold. So there's a support area again at this point, in which people were thinking that this is where the gold we buy from, and it actually came there, and the bulls came in, and the market, all those people who bought the gold on this point because of this bullish candle, the market came back and stopped all of them out, then closed back above this area. So with this thing that the market have done, with this that the gold has done, in the coming days, my bias for the gold will be to the upside, because I can see that price is bouncing off from this demand area. There was a support area, or maybe a demand area also here in the past. Retail traders were thinking the price will start buying from here because it's a demand area. Price came there, the buyers came in, but it was a manipulation. After some movements, the sellers came in and they stopped out all the people that have been trying to buy the gold from here. And price closed back above this demand area. So for the price closing up back above this demand area, that is the reason it's bouncing off from this demand. It has closed back above this area. With this, in the coming days, I will be bullish on the gold. Or what I'll be looking for in the gold is to buy the gold. I won't be looking for a selling opportunity in the coming days. So let's move over to the 4-hour time frame. So for the 4-hour time frame from the gold, I'm waiting for price to pull back. So this is my line of departure. From here, the price launched. So let me remove this now. We've established what we want to with it. So in the coming days, I'll be using my Fibonacci to take from this line of departure, this demand area, from this swing low to this swing high. I can see that there's a good 5061.8 area at this point. So in the coming days, I'll be waiting for the gold to pull back to this area. If gold pulls back to this area and the sellers fail to close below here, the only time that my bias will change for the gold is not as if I will be looking for entry to the downside, to the downside. No, the only time my bias will change for the gold is if price close below this demand area. But if the sellers come here and they get weak, or here and they get weak, and the buyers come in, I'll join the buyers. If the sellers get here, because they are supposed to create a lower low to continue this lower high, lower low, lower high, lower low. If they fail to create a lower low and they create an equal low, or they create a higher low, then when the buyers come in, I'll join the buyer. So if I take my Fibonacci, I can see that there's a good support area here, acted as a support here, acted as a resistance here. So if the price come into this area, I expect the buyers to come and use this place as a stronghold to take the price back up. So for the gold, I'll be looking to buy from this point at 40.65. Stop loss can be below here at 40.13. But if the price come down to this demand area, entry will be at 39.40. Stop loss can be below the demand area at 39.26. Type 1 will come back to 100% retracement. Maybe in the coming days, if the price rise back, if the price rise a bit up before coming down, from that point where it starts to come down, that is called the 100% retracement. So TP1 will come back to the 100% retracement. Then TP2, allow TP2 to run to a higher time frame target. And the gold, have a lot of potentials to the upside. There's a high here that the price have reached, which the market can come back to that high. All this space here is room for the buyers to come and fill. So we can take TP1 out of this. From here, we take out TP1, then allow TP2 to run wherever that the price gets invalidated. Where is it? If the price is not getting validated and the gold continue to ride, to go to the upside, we will continue to hold our position and allow the market to continue to rise to the upside. So that is that for the gold. Let's move over to the next pair, which is the Nasdaq. So for the Nasdaq, I saw something on the Nasdaq which made me, I said, okay, let's analyze the Nasdaq and then, see, get familiar with the movement of the market before the entry will come up. So I see that the Nasdaq, after this bullish move, price have been in this consolidation. If I go to the line chart, I can see that price have been trading in this range. There's a supply area, a demand area and a supply area. I go back to the candle and you can see, let's zoom out. You can see the market have been moving in this range. And what I told us, one of my rules about the ranging market is once the price have left a demand area, it's coming to a supply. Once the price have left a supply area, it's coming to a demand area. And when price have left a demand area, it's going to a supply area. So price left this demand, came to this supply. People were thinking it would be here before. People were thinking it would be around this place. It manipulated and came back down and went back up. So we have a new supply area at this point. We go to the line chart. You can see this area here. We have a new supply area. A new demand area. This is the demand supply. So it left this supply, came now to this demand. From here it launched, went back up to this supply area, that left the supply area. Its next direction is the demand area, which is this point now. And that's the problem traders are having. If the market is ranging, please only look for entry at the supply area or at the demand area. If the market is ranging, only look for entry at the supply or at the demand. This place now is no man's land. You can see some people were trying to sell. The market went up. They were trying to sell. The market is bullish again. So this place is just chaos. This place is chaos. If you don't stay away from the market at this point, you make money and you give it back to the market. So that is when, in trading, doing nothing is most cases better than doing something. The lesser you trade, the better for you. Now, in the coming days for the Nasdaq, I will not be looking for a sell. The market, even though the market have left a supply area, I know it's coming to this demand area, I will not be looking for a sell. I'll be waiting for the market to come back to this demand area so that I will look for buy. Guys, there's something about the Nasdaq. Nasdaq, this is a stock in the US, and this asset, people likes to buy the Nasdaq. Any small pullback, people buy. That's why you see the Nasdaq trends to the upside. It moves to the upside more than it moves to the downside, because at every point, whatever small discount people see on the Nasdaq, they'll buy it. So if you want to sell the Nasdaq, you need to be really, really careful. Now, for me to be bearish on the Nasdaq, price has to close below this demand area. Then I wait for a pullback. If price fails to close back inside this demand area, they get here, they stop. This is the only time my bias will change for the Nasdaq. Then I'll be looking for sell until further notice. We're going to take the price down. But if price fails to close below this demand area, the only thing I'll be looking for the Nasdaq is to buy. But I'll not be buying from this point. I will wait for the price to come to this demand area. From there, I will join the buyers. Now, I would like to zone this place now. I'd like to zone this place. And you see, if you take this zone now, you see that if you are selling from here, you are selling into a strong support area. So at this point now, you shouldn't be looking to sell the Nasdaq. You shouldn't be looking to sell the Nasdaq. If you have to sell the Nasdaq, like I said earlier, wait for it to close below this demand area. Wait for it to close below this demand area. Then when the markets pull back, when the buyers come back and they fail to close back above the demand area, they get here, they stop. You wait for the sellers to come in. This is the only time you should sell the Nasdaq, except you're a scalper. Or you're an intraday trader. Me, I'm not an intraday trader. I'm a tactical swing trader. Although I do my execution on the intraday, but I'm a tactical swing, trader. I'm not a scalper. I'm not an intraday trader. So I don't have business trying to look for a short position here. The only thing I'll be looking for is the market to close below this demand area. Buyers come back, they can't close back above the demand area, they get to this place and they stop. The sellers use this level as a resistance area and they come back in. This is the only time I'll be bearish on the Nasdaq, and I'll write the price down. Anything aside this, what I'll be waiting for in the coming days for the Nasdaq is price come to this demand area, buyers come in, and from this point I'll join the buyers and write the price back up. Buy from here or sell if price close below this demand area. Buyers pull back, they can't close above, then the sellers come or join them here. Understood? Let's go back to the forward time frame. So this is the forward time frame on the Nasdaq. So this is those areas were spotted on the daily time frame. So let's take this. So what I'll be waiting for in the coming days for the Nasdaq is I want to see price come back down to this demand area. If price come back to this demand area, if the sellers come back down to this demand area, they fail to close below, they get anywhere from this zone and they stop, the buyers come in. I'll join the buyers from here and take the price back up. TP1 can come to this point at 29,547. Then TP2 will run to the higher time frame target. Of course, the higher time frame target will be the supply area, which is 3692. So let's move out to the next pair, which is the Usoil. The Usoil has been a crazy pair going up and down. I avoided the Usoil for some time because of the drama in the Middle East between the US and the US, Israel, and Iran. It has been chaos from upside down, and when the market is chaotic like this, there is a lot of fundamentals, geopolitics that is affecting the markets. Trump can wake up at 1 a.m. and make a tweet and give a press briefing that will just, all your analysis will just be destroyed. And we do not have those insider information to know actually what is going to happen or what is about to happen. We don't have those information. Someone like Dangote might have an insider information, and that is why when the crude price is dropping, Nigerians will be like, but the crude price is going down. Why is Dangote not reducing the fuel price? And I will just be laughing at them because, he knows that this crude that is going down is just, temporary. So that is why he will not reduce. Because if he reduces now and the price goes up, what will he do? So he has those insiders information. Someone like Dangote, someone close to Trump, they have those information. Someone working in a top official in Saudi Aramco, they are the Saudi Aramco. They have those insiders information. But we as independent traders, we don't have those information. So when the market is crazy like this, the best thing for you, and you see that the market is not respecting your price action and your edge, it's best for you to stay away. But interestingly, I saw something happening on the US soil. I said, okay, I think it's time for us to participate on the US soil. So I saw that for long the market have been dancing in between this range. Market have been dancing in between this range, going up and down in this place, moving up and down, up and down, up and down. This place have been crazy. This place have been has been crazy. So but we saw the price closing below this demand area. Now it has given us a direction that it is the bias now is to the downside. So with this, in the coming days, what I'll be waiting for the US oil is to see a pullback. I want price to pull back to this area. If price pulls back to this area and the buyers fail to close back above this demand area, they get here and they stop. I'll wait for the sellers to come in. This is where I'll be joining the sellers, and I'll write the price down. So my TP1 will come back down at this 100% retracement. Then TP2 I'll allow it to ride to continue its march. So if I take my Fibonacci from let's look at this swing high to the swing low. Cool. Okay, let's see this area here. Voila, I can see this area here. And this one here, 5061.3. So let me look for my rectangle bar. Rectangle, come here, down, cool. Okay, let's move our Fibonacci. Okay, you can see on the line charts, it's a good support area that I expect to come back and turn to resistance. Look at the support area, very sharp support coming back to act as resistance. So in the coming days, I'll be waiting for the market to pull back into this area at $85 per barrel. When the price pulls back to this area at $85 per barrel, I wait for my buyers to come in. I'll join them. I'll take the price back down. TP1 will come back at this 100% retracement at 68.671, and TP2 will allow to run until our trade gets invalidated. So guys, I didn't go into deeply the idea behind our trading, but I shared some few of them with us, and if you want to get more insight about the ideas and the way I trade, you can watch our previous video. I explained deeply, because we are analyzing 5 instruments today, how to cut down so that I can be able to cover all those pairs, so that I won't use much of our time. I can see now it's already 40 something minutes gone. So for the US soil, I'm waiting for price to we can see price was turning into this range that has broke out. It has been trending to the downside. So now we've confirmed that the direction of the market is bearish. So like I told us, once I have confirmed that the direction of the market is bearish, what I'll be just waiting for is price to pull back to a good resistance area, my area of value, an area that price have used as a support in the past, that will be coming to turn to resistance, an area that when I take my Fibonacci, I can see that this area lined up with my Fibonacci. Yes, we took it on this side. Take it here. See this resistance area here. This resistance area is this from this line of the partial down. You can see that this area is 5061.8, and it's a good, area of value. It acted as a support here, becoming back, price used as a resistance to take the price down from here, and there's our 5061.8 Fibonacci area. So wait for market to rise to that area. So over identify the direction is bearish. This is a good location. We'll wait for it to come, then we'll execute. So let's go to the BTC. Let's go back so that we can just do a brief recap. For the BTC USD, waiting for price to rise to this area at 65,914, stop loss 67,996. Then TP1 will come here at 58,560. Then my TP2 will be at my higher time frame target. I've shown us that in the previous videos. So for the next pair, the EURUSD, wait for price to pull back to support area at 1.13956, stop loss below here at 1.13715. TP1 can come down here, can come up here at 1.14743. Then TP2 can come back to this supply area at 1.20826. Then the next one, the good, entry 4065, stop loss below here at 4015. TP1 4178. Then your TP2 higher time frame target at 5597. Next pair, Nasdaq, entry anywhere in between here and here, anywhere in between this point and this point. But I think the Nasdaq is going to come more down because guys, you see, the Nasdaq will take all this place. You know why? You see all these people buying this Nasdaq here. They bought here, they bought here, they bought here, they bought here. All their stop losses are here. See, all these places are filled with stop loss. The market will take it. Guys, remember in my last video I told us something that the market normally does. When the market is looking to buy, let me show you my hand. When the market is looking to buy from this level, when the market wants to buy from this level, it comes up and creates another fake level. From that level, it will be doing as if it wants to go up from there. Traders will come there, will be buying, and their stop loss will be below. Then the market will come back, take all of them out. When it takes them out, it now come back to that main support. From there, will start going. This is the main support. This is the fake support. All these people that are trying to buy this market here, their stop loss is here. When the market start to come down now, all of them will start closing their position. Some of them, the market will start taking them out. Some of them have already set this buy order. As it's coming, it will just be taking them out. That will push the market further down into this place. It will push the market further down into this place. So now I'm just zooming. I'm just taking this zone to alert you that is trying to sell, that if you are selling from here, now, where are you selling to? You are selling into a support area. You are selling to a stronghold of the buyers. So there's no point you trying to sell into the stronghold of the buyers. So when you know there's a stronghold close to you, there's a stronghold close to your position, you want to sell, and there's a support close to your entry point, why are you selling? You need the market to move for you to make money. So there's no need, So that is why I'm just putting this zone here to alert your brain that you don't need to look for sell here. It's already clear, except if you're a scalper or an intraday trader, because this is the 4-hour time frame. If you go to the 1 hour or the 15 minutes or the 5 minutes, this is a whole lot. This thing you are looking here now, this is almost like 30 pips. 30 pips is a lot for scalpers. Scalpers just need 5 to 10 pips, 3 pips, they are out of the market. An intraday trader, 15 pips, 20 pips, they are out of the market. So you must understand the kind of trader you are. You can't be a manufacturer now and you are in the market, or a manufacturer, and you are running around after retailers. For a manufacturer, most of your customers are wholesalers. Do you understand? For a manufacturer, most of your customers are wholesalers. You can't be running after retailers. It is the wholesalers that will run after retailers. So you must understand the kind of trader you are. You must understand what you are looking for. For a 4-hour time frame trader, you're an higher time frame trader. Avoid joining them in all these their petty moves. Wait for the major move, and that is the problem. And that is why most traders don't like the higher time frame, because they want activities. Traders want activities. They want something fast. So that's why they tend to be more in the 1 minute time frame, the scalping aspect of things, the intraday aspect of things. Is it working? It is working. There are fantastic scalpers and fantastic intraday, traders, printing money every day from the market. But you must look for what works best for you. For me, I've seen that I'm not the scalping type. I'm more of a deep thinker. I'm more of an analytic person. I like to take my time to do my analysis, to think about something. Sometimes, my wife will ask me something and I will take time to answer. It'll be like, I ask you something, I'll tell her, cool down, I'm trying to process. Or later I'll give you a response. So, I don't like to be hurried in things. I remember back days in school when I was in high school, sometimes I might take even the longest route that does not have a lot of people, that few people are walking. So, I'm that type that likes to take my things, gently, and take my time to analyze things. So my personality more is, slow and steady. Slow and steady. So you must know the type of person you are. You must know the type of, your style of trading and your personality. So don't join them in all those their doings. I don't know if I make myself clear. So eventually I'm looking at this market will come to this point. So in a nutshell, for the Nasdaq, we wait for price to fall back to this level at 28,380. Stop loss can be below here at 28,194. Then your TP1. Now, where will be the best place to exit this price? I can see. Let me see the mean reversion. I take from here to here. Okay, cool. This will be a great spot. TP1 can come here before this resistance. You see this resistance, this support come back to act as a resistance. So your TP1 can come here, at 29,547. Then your TP2 can come back to the supply area at 30,692. So for the US oil, we wait for price to rise. This US oil will take time. This entry might not be in this coming week. And guys, you must understand that we're in the new month. We're in the new month. The first week of the new month is like the first day of the week. I repeat, the first week of the new month is like the first day of the week. Is filled with indecision. Then the first day of the week, the big boys, they hardly decide on what to do for that week. The higher time free traders, for the Mondays, they hardly decide on what to do. It's from Tuesday they begin to say, okay, we want to buy here. Let's sell first before we buy. You understand? So the same thing with the first week of the month. So if you are coming to the first week of the month, come into the market with a calm state, observe things, don't just rush, because this is a battle. As a mercenary commander, you must be patient to analyze the battle. If you don't analyze the battle, you might jump in too quickly and you jump into the wrong side of the battle. So but when you take your time to analyze, allow the battle to play out, allow the market to play out, allow the market to print in candles. Come, look at the market and observe how things are going. From there, you begin to notice the side that are weak, the side that are strong, and you begin to know, okay, I think the sellers are strong, but I'll be waiting for them. I'll be waiting for the battle to come to this location. From there, I will deploy my capital. So for the US oil, we can see that, the bears are strong. The US oil is trending to the downside, but we cannot sell from this point. We can't sell for this point because the US oil is bearish. Does not mean you start selling. We must wait for price to rise to this support, this resistance area at $85 per barrel. From there, if the sellers come back, we'll join them at 85. I think is this 85 or 86? Sorry, okay, $86 per barrel. We'll join the sellers if they get to this area. Stop loss can be above here at $90 per barrel. Your TP1 can come back at the 100% retracement at 67.755, and your TP2. Let me just measure this range so that we can just have the TP2. If we take this from here to here, take this from here to here, take this, boom, boom, take this down. Okay, let's just say 45. Your TP2 can come down to $45 per barrel. $45 per barrel. So if the US oil did not close back above this demand area, if it gets here and they stop, there's a tendency for the price of the crude oil to come down to $45 per barrel. And guys, let me make this announcement. You are hearing it, from Lazarus Capital. If the crude oil fails to close above this demand area, they get here and they stop, and the sellers coming from here, the crude oil have the potential of dropping back down to $45 per barrel. So tell Dangote that the general is making this prophecy. Is it a prophecy? Choose yourself what you want. So that is that for today, guys. Thank you for staying to this end. Until I see you in the next week video, be careful. Know your job is to preserve your capital. Remember, first is identifying the direction of the market. Second is identifying a location. And the third is execution. Until I see you next week, God bless you.